I've spoken at a lot of conferences, cybersecurity, legal, regulatory, law enforcement, and money laundering conferences. But George, this is the first time I've ever spoken at an investing conference. So thanks very much for inviting me, even though I'm not an investor. I'm an electrical engineer, attorney. I'm an entrepreneur, and I know something about economics and finance. But I know absolutely nothing about investment. Every time I've tried to invest my own money, I've lost a good percentage of it. So I've learned to use professionals, and my guy's doing a really good job for me. So today, all I'm going to talk about, I'm not going to talk about investment. I'm going to talk about Bitcoin, what Bitcoin is, and also what Bitcoin is not. To sum it up, Bitcoin is not investing. It's simply gambling in a rigged game. So let me tell you. Last year, the Bitcoin price started going up, and I started seeing on social media, particularly LinkedIn, a lot of posts from people promoting Bitcoin. I saw a lot of factual things were simply wrong. And so I started correcting them and putting in my own critique about Bitcoin. I had never experienced anything like the reaction that I got. It was extraordinary for me. I got vicious personal attacks, nothing that I've ever received before. My kids, to explain it to my family, my kids said, "Don't worry, that's just what happens on social media. That's normal. That's like social media hate." But at first I couldn't handle it. So let me just explain some of the more mild comments that I got. Like, they were way over here, but some of the very mildest were, they called me clueless. I got that this morning. Okay, boomer, a lot of times. Almost every time, I'm an old man. And then when I didn't understand it first, they called me a bitter no-coiner. Eventually, I found out that it meant that they thought I was saying what I was saying because I was bitter that I hadn't bought Bitcoin cheap. So I'm a no-coiner. The favorite one I got last week, the favorite one, some guy said that I had room temperature IQ. I got to use that sometime. I don't know when I'll use it, but I got to use it. As a lawyer and an engineer, I've always been taught and trained and used professionally facts and arguments to support my point. So I stumbled upon this community that had so little facts and arguments that would support their argument that they quickly resorted to personal attacks. Somehow they thought they could win an argument with a personal attack. I learned in high school debating that it's a good indication that you're losing the debate if you resort to a personal insult. What drew me particularly was their style of argument. They had these pseudo arguments, and it was their style that I found particularly interesting. What they would do is they would throw out a point why Bitcoin is great. I would poke a hole in it. And then instead of responding to my point, they would say, "Well, but what about this?" And they would make a completely separate argument. And then I would poke a hole in that. And they would say, "Well, what about that?" And this kept on going, and it quickly came full circle. And each person that I engaged, they had the same argumentation philosophy. And it started getting boring very quick. And a waste of time. So what I figured I'd do is I'd look, for a link that I could just paste in to respond to these people. I was looking for, ideally, a peer-reviewed article in an academic journal by a top economist that went through and debunked every argument on pro-Bitcoin. I had seen a lot of blogs that were Bitcoin skeptic, videos, op-ed pieces. In fact, George, you did a great job with your op-ed in the Globe, and I recommend everyone to read that. But I didn't see. I was looking. I couldn't find a piece in a peer-reviewed journal, or even any journal, that would go through in detail and whack all the moles at once. You may have played that game Whack-A-Mole at the fair, where there's a mole that pops up, you whack the mole, another mole pops up. That's what the game was. And so I was looking for something that I could just paste in. But I just couldn't find it. I would go to Amazon and I would type in Bitcoin and scam. Hundreds and hundreds of books would show up. They'd all be pro-Bitcoin. There'd be a few that would have a title like Bitcoin, great investment or scam, question mark. Of course, you read it and it's, yeah, Bitcoin's a great investment, not a scam. So talk to me and I'll tell you how to make a lot of money out of Bitcoin. So I couldn't find anything that gave the skeptical perspective. So I decided to write the book myself. I wasn't starting from scratch because I had advised a few companies in the area. I advised a company that traced Bitcoin for law enforcement. I advised law enforcement about various illegal aspects of using Bitcoin. I'd also advised companies that were subject to a ransomware attack. Ransomware is where you have to pay off the criminals with Bitcoin. And I also knew something about the blockchain technology that Bitcoin uses, because I advise a company that uses blockchain. I found myself in a rare position where I could see the whole picture, how it all fit together. To understand Bitcoin, you need to be comfortable with each technology, law, economics, and business. I started talking to experts, and what I quickly figured out is that each one of those experts were deeply expert in their area, but they were uncomfortable in each one of the other areas. So they could talk about the area and they were uncomfortable about Bitcoin in the area, but they thought maybe there was something to it in the other area. So for example, economists would say, well, yeah, this is not money. There's something really fishy about this, but maybe this blockchain technology, maybe it really is a game changer. And then I talked to lawyers. Lawyers would say, yeah, I know this is something fishy, kind of looks like a pyramid scheme, kind of looks like a Ponzi scheme, but the economists aren't coming out against it. And maybe there's something with this technology that makes it unique. The business people, of course, well, they just figured, hey, this is a great opportunity to make money, and they have creating companies in the Bitcoin ecosystem. It was the technology people, I guess, coming as an electrical engineer, it was the technology people that I was most disappointed with. I figured they, like me, would look at the facts, look at the logic, and figure out for themselves what Bitcoin was. However, the technologists loved this blockchain technology. It's all that mattered to them. And their logic was simply, blockchain is excellent. Bitcoin uses blockchain. Therefore, Bitcoin is excellent. That's like having said early in the internet is great. Pets.com uses the internet. Therefore, pets.com is excellent. And of course, we know that pets.com wasn't excellent at all. So now an opportunity here to plug my book. Okay, there it is. It's called The Coin Men. It's available on Amazon. There's a maximum printing of 21 million copies of this book. Therefore, each copy of this book is worth $40,000. So that's a little bit of Bitcoin humor. It has to do with the fact that the Bitcoin promoters have put in the software to cap it out at 21 million. We'll get to that. And just in case you didn't notice, the I in CoinMen is shaded out. Let me read, George gave a great blurb. So let me read his blurb out here. Once I started this book, I did not want to stop. It covers all the points that I could think of and more. It's a good read for the general public, and it is essential reading to understand the truth about Bitcoin. Thanks, George. What is Bitcoin? You've all heard about blockchain and decentralization. That's completely irrelevant technobabble. Just forget about it. It doesn't matter. A car is a car because it gets you from point A to point B. It doesn't matter what's inside the car. It doesn't matter whether it's got an internal combustion engine or an electric motor. It's completely irrelevant. So it doesn't matter how Bitcoin works. It matters what Bitcoin does. There's no need to look inside the black box of Bitcoin. The Bitcoin promoters love talking about what's inside that black box, thinking it's brand new technology. Blockchain technology has been around since the 1980s, since I was in electrical engineering. They just use the technology as a distraction. It's kind of like the magician, where the magician is talking all his magician patter over here while he steals your watch. Well, the Bitcoin promoters are talking all about blockchain while they're stealing your watch. All you need to know about the blockchain technology is that it is like a big Google spreadsheet. It's a record of all the Bitcoin transactions that have happened since the start of Bitcoin in 2009. That's it. It's a very slow and limited spreadsheet. The only thing interesting about it is how it's updated. They call Bitcoin a cryptocurrency. So what's money? The purpose of money is to lower transaction costs. Anything can be used as money. Matchsticks, a copy of my book. But what is good money? That's the question. Is Bitcoin good money? Does Bitcoin lower transaction costs? Good money has three key features. It's a medium of exchange, so it's commonly used by many people in exchange for many different goods and services. It's a unit of account. So goods and services are priced and recorded using that unit of money. It's also a store of value. So if you hold on to that money, it'll be worth about the same in a few days and in a few weeks. Bitcoin, it's not good money. Despite all the promotion, almost all types of transactions using Bitcoin have higher transaction costs than using the normal methods of transferring money. A big transaction cost a lot of people don't think about is the time it takes. It takes 10 minutes to confirm a transaction. A Visa transaction, of course, is instantaneous. So if you buy a coffee with Bitcoin, it'll be cold by the time the transaction is confirmed. Bitcoin is also not a good medium of exchange. Very few merchants accept it. Very few people want to spend it. And they don't want to spend it because they bought it expecting that they're going to sell it for a lot higher. They didn't buy it to part with it to get a coffee. And they certainly don't want to be that guy from 2010. There was a guy in 2010, he bought 2 pizzas for 10,000 Bitcoin. That's about $400 million today. So they don't want to be that guy. And that's why less than 0.15% of transactions using Bitcoin are for the purchase of legal goods and services. There's more illegal purchases than there are legal purchases. Even in El Salvador, where the president made it forced legal tender, very few people use it. People have to today accept Bitcoin. All individuals, all businesses. But they don't. Everyone was given $30 US dollars for free, and they were given a special wallet where they could transact. And this happened back in September. But almost nobody's using it. Almost everyone just traded in that Bitcoin for 30 real US dollars. Bitcoin in El Salvador has been a complete failure. Bitcoin's not a unit of account. Even conferences on Bitcoin, they price the conference in US dollars. They don't price it in Bitcoin. It's not a store of value. As we know, it regularly drops more than 10% overnight. Over the last 4 years, in a few weeks, it's dropped more than 3 times. It's dropped more than 50% over the last 4 years. The main reason that Bitcoin fails as good money is its high volatility. And that volatility is the clue to what Bitcoin really is, gambling. Some promoters have figured it out. They figured out, okay, so Bitcoin's not money. And they're now arguing that it's digital gold, that it's a store of value like gold. It's got all the properties of gold, but more. Bitcoin is completely different to gold. The characteristics of gold, we know they're over thousands of years. It's non-corroding, so it's shiny and wonderful to look at. It exists in limited quantities. It's globally well-known. It's difficult to counterfeit. The soft metal is great for processing into jewelry, for industry, and particularly for coins. And that's where standardized coins made reduce transaction costs even further. You didn't need to weigh the gold anymore. Half the gold every year is used for gold jewelry. Only a much smaller percentage is used to put in bank vaults. Gold is valuable since it is useful. Bitcoin has almost no legal utility. The price of gold is stable. The price of Bitcoin is not. Gold is inversely correlated to the market. Over the last 2 years, Bitcoin has been correlated to the market, 0.5. In the last 6 months, it's been significantly more correlated. And at that surprise moment when the Russian tanks crossed the border into Ukraine, Bitcoin crashed. Gold did not. Now let's get to this 21 million. This is the infamous 21 million that I talked about, where they put in the Bitcoin code, Satoshi, the fictitious Satoshi Nakamoto. He put in the code that only will ever be 21 million Bitcoin ever issued. It's a line in the code. And they say because of that, it limits it so that it's like gold is a limited quantity. But artificial scarcity does not create value. I can have 10 sheets of paper here and sign my name on each of the 10 sheets and call it a Bob Buck. It doesn't make it valuable. It doesn't make it worth $40,000. It's not even worth the paper it's written on once I put my signature on it. Other reasons. Bitcoin has almost no value. 21 million times zero value is the same as 1 trillion times zero value, is the same as infinity times zero value. It's irrelevant what the maximum is. Also, there are thousands of crypto out there. Just to take one, Ether. Ether is the crypto that powers the Ethereum network. Some people call it Ethereum. Ethereum has no limit. Ether has no limit on the number that will be issued. Ether and Bitcoin are correlated 0.8. The market is trading and exchanging Bitcoin and Ether all the time in high quantities. They're the same. One has no cap. Therefore, Bitcoin has no effective cap. There's other reasons. There's forks. What's a fork? It's just when somebody wants to update the Bitcoin software and they can't all agree because it's decentralized. So some people go this direction, some people go that direction, and it ends up to be a fork. And you end up with double the amount of Bitcoin. Some's called Bitcoin Cash, others still called Bitcoin. And then there's something called Bitcoin Satoshi Vision, BSV. You can create as many of these crypto as you want. And then there is just changing that number. Right now, it's not in the interest of the people controlling the Bitcoin network, the miners, to change that number because it's a good argument that's maximum 21 million. However, that the amount of Bitcoin they get every 10 minutes to keep the system running, 6.25 right now. Every 4 years, it drops by half. So at some point, there may be an argument that they're going to make, and it's going to be in their financial interest to just change that number. They argue that it's a hedge against inflation. The last couple of months, as inflation has gone up, Bitcoin has tanked and now flattened. I understand many criticize fiat currency and the expansion of the money supply. However, going from US dollars to Bitcoin is like jumping out of the frying pan and right into the fire. Bitcoin has absolutely nothing backing it. At least the US dollar has the full faith and credit of the US government, for whatever that's worth. More so, those 3 crashes of Bitcoin of more than 50% over the last 4 years, they are unmatched by any of the main fiat currencies over the last 50 years. Bitcoin isn't even an asset. It has no cash flow, no utility. There's no way to value it. So it's not a currency, store of value, not even an asset. What is it? I thought perhaps it might be gambling. People are buying it just because of what they think others will buy it from them in the future. Kind of seemed to me like betting on football, right? Betting on the point spread, because the point spread is determined by what others think about how the game will end. So I started looking at the US gambling laws, and I did conclude that Bitcoin was an unlawful game subject to chance. Gambling. A couple months ago, I spoke at the Consumer Protection Conference of all the 50 state attorneys general. The state attorneys general regulate gambling. I said exactly this, and nobody disagreed with me. Bitcoin also has the addictive qualities of gambling. There's a lot of serious health issues that are rising. In my view, Bitcoin is the world's largest unlicensed gambling casino. So my message that I give regularly to governments around the world is that they should investigate the operators of the network as to whether they require a gambling license, the miners, the exchanges. There's a lot of bad things that people do with Bitcoin. It's not just the ransomware that locks up people's computers, money laundering, tax evasion. North Korea is building their atomic bomb using money that they got from Bitcoin. Russia's funding their war effort. To top it off, the Bitcoin network uses 0.6% of global electricity production. Just to put that in perspective for you, the public cloud uses 1% of global electricity production. The public cloud is where most of us get almost all our information from. Google, Amazon, Facebook, Netflix uses the public cloud. Almost everything we use, Apple, and that uses just 1% of global electricity. Bitcoin uses 0.6% just to run the Bitcoin network, never mind all the other crypto. 100,000 Americans every single day are buying their first Bitcoin. 20% of them are buying it on credit, money they can't afford to lose. Right now, industry analysts say that about 50% of owners of Bitcoin are underwater. That's at about 41,000. If the price drops to 35,000 again, that'll be 70% of people will be underwater. This is an investing conference, so you might be asking, well, why shouldn't I invest a tiny percentage of my portfolio in this speculative asset? The problem is you wouldn't be playing a fair game. It's not betting in a fair game. The major Bitcoin owners, the whales, they're constantly manipulating the market. And it's not just these swings you see on an hourly, daily basis. It's the micro swings. It's by the split second. The whole Bitcoin market is a big speculation. The market is unsupervised. The exchanges are not regulated. At least 42%, probably much higher, like 60, 70% of the Bitcoin is owned by 100,000 people. At least 25% of the Bitcoin is owned by 1,000 people. There is no disclosure. Every market manipulation method that is banned in supervised markets is used in the Bitcoin market. Spoofing, wash trading, layering, pump and dump. This is par for the course. This is the market. This is what they do. The Wolf of Wall Street, that guy, Jordan Belfort, he now promotes crypto. So if you want to trade in the Bitcoin market, just remember the old saying. If you've been in a poker game for a while and you still don't know who the patsy is, you're the patsy. Bitcoin is not an investment. It's just gambling.
Thank you very much, Bob. Just a comment, I guess, before Elena reads some of the questions. Like 40% of millennials have invested in Bitcoins. I mean, a whole generation could be wiped out of the map, I guess, if it goes down to zero. Eh?
That's absolutely right. There was a great post just yesterday. It said not just that 40%, but 28% of them are planning to rely on crypto to support them in their retirement. It's yet more evidence that millennials really are the smartest generation ever. And why not? Anyone who's read the Harry Potter novels knows that solving a financial crisis is easy. All you have to do is wave your wand. If we can magic up 2 trillion, why not magic up 200 trillion and make everyone a millionaire?
Elena, can you read some of the questions, please?
Yes, of course. We have a question from the audience someone says, what do you think about 2 decisions made by China? A, to ban Bitcoin, B, the use of the digital yuan. Would it make sense to think about a digital dollar vis-a-vis Bitcoin?
Excellent questions. I think it was a great idea to ban Bitcoin. I don't like praising dictatorial regimes at all, but that's an example of where they can do what needs to be done because they don't have to answer to the public that has already bought in. Yes, I think there is a correct way of having central bank digital currency. From what I know about the Chinese digital currency, it's a big privacy invasion. China likes to supervise its people, so I'm not in support of that implementation of it. However, there are implementations that are being designed that can protect privacy of individuals. That's the direction we're going. But we have to go down that direction slowly because it is a huge change, and if you get it wrong, it's a disaster.
Okay, next question.
Why aren't major U.S. banks like JP Morgan coming out and talking about the negative aspects that exist?
It's an excellent question. JP Morgan's CEO, Jamie Dimon, is. But at the same time, he said, I'm in business and I'll give the customers what they want. And the customers are knocking on their door and they're saying that they want JP Morgan to help them and advise them and trade crypto for them. And they're doing it. It's just business reasons. That's it. Goldman Sachs just came out recently. One of the major banks came out recently, and they're investing in around one of the crypto players. One of the stable coins is issuing. It's another crypto. Well, they're doing that because they're holding on to the assets. They're the money manager for the assets of this stable coin, the assets that back the crypto. So there's business reasons. That's the answer.
Yeah, these are some of these are the companies that they were pumping up stocks to the clients when inside the company were saying these are garbage, these are garbage stocks.
Exactly. It's like mortgage-backed securities. Some of these Wall Street traders, they'll trade their grandmother for a commission.
Next question, Elena.
How do you feel about digital currency backed by central banks? Can this be done effectively?
It can be, and that's the central bank digital currency, like what China did. I think we can do it. I think it's a good idea. If governments don't do it, major players like Facebook has tried, and other major players will try. So that's applying pressure on governments to do it. It's got to be done in a safe way. It doesn't necessarily have to be done with a lot of great technology. I have reviewed a lot of interesting technologies, most of them not using blockchain, that can implement a central bank digital currency. Some are using blockchain, but the better ones are using other technologies that I've seen. However, there's very simple solutions too to a central bank digital currency. It can use most of the existing infrastructure of the existing banking system, at least in North America, where we've got a good banking system. There's a lot of details that have to be worked out, and there's a lot of rules that have to be put in place. But the actual infrastructure does not need, technological infrastructure does not need to be revolutionized.
Okay, next question.
Yes. What practical options do governments have to limit Bitcoin and other cryptocurrencies, given that, the core pillar of the technology is that it's decentralized?
Putting people in jail.
That was it.
Okay. The next question: how do you see the downside of Bitcoin playing out over the coming years? Do you think that it will be the regulatory decisions that provide the prick, or will it be market forces?
I think it's an excellent question, and I don't know. These are just guesses. I think there'll be a lot of pressure. There are market forces right now. They're trying to keep it over. They're manipulating it to try to keep it over 40,000 right now because that's a psychological barrier. That if it gets below 40,000, then it might sink down to early 30s and then jump down to 10. But there's nothing keeping it up. in reality. Yes, there's going to be more and more regulation to restrict it, country by country. India just banned it. There'll be more supervision. They'll regulate the exchanges. That's the SEC has already indicated that. In Europe, they've already said that every single transaction using crypto has to have AML. You have to know who the parties are to the transaction, even if it's just a penny. You have to know, because you can have lots of pennies being transacted under the system. And now I think the biggest Achilles heel of Bitcoin is going to be the environmental aspect that I talked about. A year ago, Greenpeace was accepting donations in Bitcoin. A couple of weeks ago, they came out against Bitcoin. They're saying Bitcoin has to work in a completely different way. And they have to get away from this waste of electricity method of working to a new method. That, I think, can be a catalyst to, if that changes, can be a catalyst.
There's an audience member in the Q&A asking if you can show your book again.
Absolutely, thank you. I didn't know. I didn't know I had a plant in the audience.
I'll put the link in the,
actually, Bob, this attendee is from Argentina. So.
Sorry. I didn't hear what you're saying. But from Argentina.
This person is from Argentina. He lives in Argentina.
Well, thank you from Argentina. I appreciate it. It's available on Amazon. The Coin Man. Thank you.
Okay, so like two more questions again, then we'll wrap it up.
Someone asks, at what point does crypto become a systemic risk to the monetary system by virtue of its prevalence?
The more and more institutions that are investing, the more serious it is. If individuals lose, that's fine. But that's what's happening. There's more institutions investing. There's if retirement funds start investing, and we've seen a little bit of that. If retirement savings are in crypto, the government is already concerned about that. And you saw a couple of weeks ago, President Biden issued his cryptocurrency executive order, and that was front and center. He said crypto has to be subject, the use of crypto has to be regulated, subject to issues of financial stability, national security, and cybersecurity.
Time for one more.
Yeah.
What do you know what the current cost to mining a new coin is, and how that is changing over time? How important is it that the price of Bitcoin remain above the cost to sustain the network?
That's an excellent question. The way to think about it is that right now, the Bitcoin mining reward, what the miners get every 10 minutes, is 6.25 Bitcoin. The price of Bitcoin is about $40,000. So you multiply that, and you're going to get how much they get every 10 minutes. Then the vast majority of that is wasted electricity. So it's almost a perfectly competitive marketplace, because you've got these miners from all around the world all running computers and competing with each other to get this mining reward. So you do the math and you figure out that it's almost a perfectly competitive, and the vast majority of that mining reward is expended in electricity. So that's the cost. If you want more details on that, check out Bitcoin Cambridge. The University of Cambridge does an excellent analysis on just that question.
There was one question in chat that is not directed through Elena, and this person asks, as energy prices rise, how would this affect Bitcoin?
Not directly, because Bitcoin continues to operate. You have all these miners. There's 20 large organizations that mine 98% of the Bitcoin and run the Bitcoin network. And they all compete with each other, mainly on the price of electricity. So they're running all around the world. They used to be in China before China banned them because that was the cheapest electricity. Then they moved to Kazakhstan. Kazakhstan got rid of them, and they're up north in Canada where it's nice and cold to cool down all the hot computers. They're also in Texas. So they go to the cheapest electricity. And they're in Sweden now too. So as the price of electricity rises, it doesn't really affect the operation of the system at all. The price of electricity does not determine the price of Bitcoin.